Hi, this is Matt from Optimus Futures. Today I'm going to talk about trading signals, their significance, the questions we get asked about them, and what I personally think about them. So I'm going to talk first about signals that are not generated by the trader, meaning he's not the one who came up with the trading signal. He is actually following some sort of an indicator or following some sort of a newsletter or some sort of a signal service that tells them to buy or sell. Okay, and I'll tell you what that means in the whole scheme of things in your overall trading career. So essentially in any given trade, the buy or the sell signal, I think they represent a very small percentage from, let's say, if a whole trade is going from zero to completion, getting into the market and exiting the markets. I think the signal itself does not represent a lot. I don't know if it represents 5% or 10% or 15%, but it definitely doesn't represent 90%. And this is what a lot of new beginners do not understand. At any given time, there could be a lot of buyers and a lot of sellers, and everybody's doing it for a different reason. So a service that provides only a signal to buy or to sell in itself does not provide a lot of value. Traders, in my opinion, sometimes they don't want to take the responsibility for the trade. I'm not saying that they are really trying to avoid responsibility. They're actually afraid to take on responsibility. So they prefer to rely on something that would give them the buy or the sell signal. But when you don't take the responsibility, it's like letting your hands off the wheel when you drive. So the buy or the sell signal, again, it's a small percentage. Here's what's important. What's important in any given trade is the risk management, is how you manage the trade once you get in. Okay, where you are able to get out, when is the trade not going your way. The whole concept of risk management comes into play once you're in the market. A trading method is not a signal. You have to know the logic behind it. You have to understand what caused somebody to get into the market. Why is it a buy? Why is it a sell? On what method is it based on? What market conditions have led to that point that it gave it a buy or a sell signal? If you understand that, then you can manage the trade. Then you can take on responsibility. Then you can have the right risk management behind it. So again, understanding the process, it's very important. The other last thing I would say about signal providers, indicators, and all that stuff that you end up buying, but not really understanding the logic behind it, think about something. Think about the fact that maybe that provider will not be there tomorrow. What if that signal crashes, that indicator crashes, you can't retrieve it, the newsletter is not available anymore? What is the learning experience that you got out of it? You know, I don't think you'll get much. So what I'm really trying to do is encourage you to develop a process where you do understand the buy and the sell process, why you buy, why you sell, and then you'll be able to attach the risk management to it. Then you'll be able to exit the market as well. I hope this was helpful to you. Thank you, guys.